Okay guys, in this case I want to do a tutorial in English because a lot of you ask me about this strategy, so I want to share the important rules and tricks to find the best setups to trade the reversal morning gaps. This kind of setup is the same that a lot of important traders made, like Meir Barak, pretty important trader. He only trade these kind of setups. We have Chris Prim, we have Nathan Calleja, and some of the other traders that only do these kind of trades. For example, another one is Melissa Armo from Stock Swoosh. Okay, and so let's start. Okay, there are 10 rules and tricks to find the best setups. The first one, you need a scan to watch these stocks, to look for these stocks, okay? And the most important and most obvious is the gap, okay? We only look for gap downs. Let's concentrate always in the best setups. So the gap downs are the faster movers when the panic came to them. So we need gap downs that have more than 2%. Every day we have gap downs, even if the market is going up. Okay, so gap downs more than 2%. Then the second one on the scanner, we need volume at least at 9:25, 5 minutes before the market opens. We need more than 50,000 shares. Okay, it's really important because we need liquidity. We need institutional money in all these stocks, and the pre-market is a pretty nice way to watch which stocks are going to be really liquid. Okay, the third important filter in the scanner is the price of the stocks, and we want more than $10 stocks. Why? Because less than $10 are low floaters, small caps, and these stocks we use it for trade long when we have an ABCD pattern. So it's really different because in this case we are looking for gap downs, and in the other case we are looking for different kind of momentum, bullish momentum. And okay, so it's really important, this one. More than $10, so you can use a pretty sophisticated broker that have leverage. In my case, it's Colmex. You can use shark traders, you can use speed trader, you can use some broker that have a lot of leverage to short sell a lot of stocks. Well, not a lot of stocks, but these stocks are expensive, so you need buying power to make this thing. So okay, the first trick, and really important, you have to watch the 2-minute chart. The 1-minute chart is pretty contaminated. A lot of candles in different directions, green, red. So in this case, we want to see the 2-minute chart. It's not so slow, but it's not also so fast. So have the 2-minute chart have the important information that we need to read the patterns, especially the pullbacks. So never ever trade the first 2 minutes of the trading day, because the 2 minutes everybody wants to make transactions. A lot of volume came out, sometimes a lot of range and volatility. So the real price action is after that. Okay, the real price action, the primary behavior and feeling of the market is after the first 2 minutes. So it's really important to understand this, because you can lose a lot of money on the 2 minutes, a lot of range, and bad price action, bad entry price. So forget about the first minute. Just watch, and this is the 5 tip. Just watch the first minute the first 2 minute candle. Okay, watch the range, watch the volatility. If we have a candle that have a lot of volatility, like I don't know, maybe 10 cents, 20 cents, a lot of range, forget about that stocks. They are pretty risky, and I'm pretty sure that they have a lot of bid and ask spread, pretty huge. So forget about them. look for charts that have a really nice price action on the first minutes of the day. Okay, watch the first candle, the first maybe two candles, and watch the price action. Need to be really normal. Moving up maybe is better, and wait for the first reversal. So okay, the sixth one is always, and I mean always, see the daily chart in your pre-market research. When you have the scan, the gaps, more than 2%, more than 50k, and on volume, and more than $10, always watch their daily charts, always. And look for the important levels, the important supports and resistance close to the gap. Okay, watch the last price on that pre-market time, and watch the important levels that are pretty close to that, and mark on your charts horizontal lines, because they are pretty important to know where is going to find some kind of pivot point in that price. So a really important thing is if the daily looks well, if we don't have a lot of gaps on the daily, because if the stock have a lot of gaps on the daily, it's telling you that this stock is trading in a different time zone on another market, maybe England, maybe I don't know, Asia. So look for pretty nice charts that have a lot of panic. In breaking supports is really important. If we break some really important supports on pre-market, I'm pretty sure that they are the best setups. So look for that kind of charts on the daily. The next one is wait for the first resistance. Okay, wait always for the first resistance, because you will never know where is going to go the price on the first minutes. Maybe go higher in the direction to closing the gap. So wait for the first resistance. Big wall of sellers on the level 2 is going to appear almost every time. So when you saw something like that, you will know that that's your price. That's the first reversal, and you want to trade. When you find the first resistance, you are in the trade, in the price action. You are focused on the price action. Okay? Then we don't have entry yet, so wait for the confirmation of the reversal. Maybe we find resistance just for a small time, and the stock continue higher, and that's not what we wanted. We want the watch the first resistance, and then watch the break of a really important psychological level, like a round level, round penny, like 50 cents, maybe $1. So it's really important. When we have that break of the important level, the psychological level, you will know that this stock is pretty weak and the panic is everywhere. So look for this type of price action. Then once you have your confirmation of the reversal, calculate your stop before. Always the risk is before the profit. Okay, you calculate always the stop, and a nice place to put the stop is up the highs in a really psychological round level, and it has to be above that level, that round level, a penny or 2 pennies, but let the price action works. Never put a hard stop. A hard stop is when your average price versus your stop loss price is pretty close. So give it a chance to work. Maybe you lose in the first couple of minutes of decision, so be patient. And the next one, calculate your the last one, be patient. Okay, pays more, always pays more to be patient, and use studies like, for example, this strategy, like for example the moving average, the exponential moving average, for example, of 8 sessions is the one that I use more, and the 21 session is really important also. In the 2-minute chart gave you the opportunity to follow the momentum, the opportunity to follow the price action in direction of your trade. Okay, so that's good for calculate your target, and it's really important the risk ratio more than 2. Okay, so let's watch some examples. the examples, and as you can see, we have this 2-minute chart of NXPI is one example of today. So we have just a couple every day, just a couple of that kind of patterns every day. Focus on only one and trade well this one, okay? Don't look more charts, don't look at another setups, always look for the best patterns. Sometimes it's one, sometimes it's two. I only trade one at the morning, okay? So really important. I have my my gap scanner, and as you can see, we have a huge gap on this stock. This is the 2-minute chart. Let's watch the daily. It's another trick that I said. Watching the long term, and as you can see, this is in a phase of pullback. Look at this. We have some hammer right here and then going down. The gap is right here below 80. So that's really important. It's below 80, a psychological level, and is below this support right here, below this support. And if we go even longer, I mean, we are below this kind of support. So for me, the daily looks pretty awesome. Let's go back to the 1-minute chart and let's watch what happened. Okay, so it opens the range, it opens really nice on the first candles. We have a lot of volatile actually. We have like 35 cents, but it's nice because it's a higher price stock. Okay, on the first minutes we have volume like 300 shares, 300,000 shares. So that's good. I like it. What we have to wait, as I said, the first resistance. So we have right here a resistance at 79.25 almost. So remember the quarter of pennies like 25, 50, 65 and around. Okay guys, as I said, never ever trade the first 2 minutes. Look at this, a lot of range, big shadow, so forget about to trade this candle. Forget about it. So right now you start to plan your trade. We have 79 round level just below this level, below this candle, sorry. What we have right here is really important because we have a break of that round level, entire level of 79, and we fail. So big resistance. What you have to do, as I said, wait for your entry on a breaking point of a really important psychological round level. And we have the perfect storm right here. Breaking the 79 is the perfect point of entry. So you can entry right here at 78.95, 78.94, maybe 70. If you are smarter, you can trade at least the half of your position right here at 78.99 and add on the lows. So look at this big candle, pretty awesome, right? Your stop loss, as I said, over the highs and a psychological level. And I use always the quarters, so 79.25 is a quarter. I will put a stop at 79.26, maybe 1 cent above that level. Really important. So it's above the high. There are 25 cents, maybe 30 from your entry price. So that's great. Right now it's working for you. Just let this thing run. Bam! We have a huge spike and a huge shadow. This is a hammer. So you can take the half of your position on the breakdown and wait just another time. Once you have your first target, remember always to, if we have 25 cents right here and my target needs to be more than 1 at least. So 79, almost 40 cents. So we have more than maybe close to 2 on risk benefit if we took right here. If you can't, just wait. I mean, all the panic is coming in. So let's wait. Okay, maybe you took half of your position and let the other half run more. Run for the break on 78.50. As I said, you need to be really patient on these kind of setups. So what's next? Okay, we are moving to the upside. Bam! This confirmed the panic Nobody wants to raise this stock. And then we have the break. So you can take your position right here at the break of 78.50, and you have your risk benefit working for you. Okay? Really awesome trade, and as you can see, we find the bottom right there. But it doesn't matter. All the trades on a reversal morning gap need to be closed at 10. As you can see, this is 10. You don't have to trade more on that area. So let me show you another example for finish this tutorial. LPI, I think was, yeah, LPI. LPI, we have a huge gap down, as you can see. Really nice percentage loser, more than 2%. And let's watch the daily now. Is what I said. Watch the daily always for important psychological levels. And as you can see, we have right here the gap down. So let's put the price of the open. And as you can see, we have support right there. We are below that support right here, and that support right here, that support right here. So we are on a pretty important psychological level at 10.80. So for me, it's a great chart. It's pretty weak, and as you can see, the last couple of days is losing. But well, this is a pullback, fell into the 12 breakout. So that's awesome. As you can see, every time we have a pullback, the stock fail. Really nice. So let's go back into the minute chart. This candle is really volatile, so you need to be careful about this. I mean, this is a low price stock. As you can see, it's up to 10. So you have to be really conscious about that and wait for the right setup. And as you can see, we have the first failure into going to 12. Then we fail at 10.95, and 10.90 for me could be a really nice entry level. So my stop is going to be at 12. 12.01 is entire level up to the highs. So we give a lot of room to this to work, and my entry price just below this round level of 10.19 is good. As we see on the daily chart, 10.80, 85, this area right here is pretty psychological. So I think if we lose that support, we will have a really nice risk benefit ratio. 10 cents of a stop and maybe 20 for target. Okay, so 10.70 or 60 is going to be my first target. Let's see right here, testing the lows. Bam, we have a huge spike. And then we have another huge spike. So right here you can take your position at 75, and you can take the half, and you will have the risk benefit ratio on your side. So this is awesome, and this is pretty overextended, so you want to take your position below 1080. Okay, as I said. And let's see the chart, just a couple of minutes. I mean, I don't care this price action. And as you can see, we have guys. So that's it for this tutorial. Remember that follow these 10 rules and you will be on the right side of the market with the institutionals. Okay, this strategy is the best one I ever trade because it works every time. And as I said, a lot of head traders from important firms, important chat rooms, they trade this one, like Maybarak, Melissa Armo, and scope traders. A lot of traders do only this type of setups and only focus on one, only focus on the best daily chart, on the best volatility, and you will see that your average gainers will increase really quick. So just follow these 10 rules, be patient is the most important, and you will see really nice profits. Thank you so much for watching, and see you next time.